Hi, my name is Hannes, and in this video I'm going to explain to you what trade credit is and how it's used in everyday business-to-business transactions. A famous example of trade credit was actually used to establish Apple, the famous computer company. When Steve Jobs received his first order of Apple I computers from a retailer called the Byte Shop, he needed to obtain the components needed to build the computers. Small problem, he didn't have any money. What he did was approach a company called Kramer Electronics and requested the products that he needed, the components to build the Apple I, but he requested them on a credit basis. So he requested trade credit from this supplier, Kramer Electronics. Kramer Electronics took a risk and supplied Steve Jobs and Steve Wozniak with the components that they needed to build the computers. Jobs then built and sold 50 Apple I's to the Byte Shop, who paid Steve Jobs upon delivery. Jobs was then able to repay Kramer within 30 days, enough money for a celebration, and to place the next order with Kramer Electronics.
So we've got three parties to the transaction: Apple, Kramer Electronics and the Byte Shop. So the process is quite a simple one really. That is, Apple requested the components that it needed from Kramer Electronics. It's requesting those components on a credit basis. That is, they get the goods before they have to pay for the value of those goods. Kramer, in this example, have provided the components and they give Apple 30 days, typically from when they receive the goods, to make payment back to Kramer. The advantage there is that it gives Apple some time to manufacture and on-sell the products that they're making from the components. In this example, making Apple I's from the components provided by Kramer. So once Apple have received the components and equipment they need, Steve Jobs and Steve Wozniak build computers for the Byte Shop. They'd already received an order from the Byte Shop. They'd now received the components. Now they can build the computers, which takes them several weeks to complete that process. After they've finished manufacturing the computers, they deliver them to the Byte Shop upon delivery. So there's no period of credit, but immediately upon delivery, the Byte Shop makes payment to Apple. That allows Apple to make payment back to Kramer Electronics within the 30-day period. And from there, the Byte Shop's got 50 Apple I's that can sell on a singular basis to mums and dads as they come into the shop, usually selling these computers at one at a time. Very straightforward process.
So trade credit exists where businesses sell goods or services to another business, then allows a period of time to pass before this loan or credit needs to be repaid. This type of short-term finance is used extensively in business-to-business transactions, and there are numerous benefits to both the buyer and the seller in these transactions. I'll run through the benefits in further detail in future videos. Thank you very much for watching.